Hey, what is up, everyone? Welcome to Market Psychology 101, where we try to look for extra value in the markets when there's fear and to be cautious when there's greed. Today, we are going to be going back in time and taking a look at Bitcoin and what the price has done during election year cycles. Going back, the first amount of data we have is from the 2012 election. Nothing before here. Bitcoin pretty much started right after the great financial crisis. So we are going to look back, see what the price does, and if there's any patterns we notice, things we can take away from it. Of course, let's go back a little and take a look at where fear and greed is right now. It's important to know what the conditions are right now, and also past performance is not always indicative of future results. You guys have heard that. What a lot of YouTubers get stuck in, though, is they make their predictions based off prior patterns. And that can be one part of your outlook, but it shouldn't be the only part. You do need to react and be flexible enough to react to conditions as they change. And the best thing I can tell you to do is just make a plan. Of course, I'm not a financial advisor, so this is not financial advice, but make sure you have a plan. So, this is just, again, what we've seen before is that the halving years, and you can see the halvings at the bottom, take place during the election years. So this was in November for the 2012 election. This was in July. Price was down here. The peaks have been typically a year or two after. This was 2020. Of course, this part, who can forget COVID? And we are in an election year right now, a halving year, election year, same thing. So we know that going back to fear and greed, greed is still pretty much neutral. Fear and greed, we did get to neutral and bounce back up a little bit because price bounced back up. Stocks, by the way, in extreme greed, and why wouldn't they be? Stocks are in all-time highs for the S&P, the Dow, and all of that. Let's take a look and measure how high did we go up in 2012. So we're going to find where January 2012 is, and we'll get close to the start. It's on the weekly, so sometimes there's a little bit of overlap. So this was close to the bottom. We went down a little bit there in the middle of February, but by the end of 2012, how high did we get? We got up around 200, and yeah, that's the beginning to the end of the year. About 250%. So keep that in mind. 250% is how much we went up. Looking at this range, what do you notice? You'll notice that around halfway through the year, that's when we got up to those highs for the year, and we stayed there to the end. The next year, 2013, that's when we started to rip up. This yellow line, that's for when we created new all-time highs. So again, 250% is how much we went up from the low during that year to the high, give or take a few percentage points. Let's go to 2016. 2016. Let's make sure that, okay, that's January, right here. Right in here, these two lines. Okay. So we are going to measure that. It's right around here. 28th, 4th, they're both around the same. So we're going to take that. And where's the end of 2016? It is right around, yeah, there, that's close enough. 26 a second. We had a big wick up there. I'm going to ignore the wick right now just because look at that. That's a big percentage change right there just for that last week. So we went from 250% to 128%, 130. What is interesting is the amount we went up was half. And does the halving have anything to do with that? Half the amount of Bitcoins get mined. And so with having a logarithmic regression reflected here with the Bitcoin rainbow chart and diminishing returns, do our returns get halved each cycle? Or somewhere around there, who knows? Looking at this here, what do you notice? We hung around those prices, dropped down a little bit. Around halfway through the year, we shot up a little bit, went back down, but by the end, we were at the highest parts, just like in 2012. So 250, 130, All right, let's go to 2020. Now, I will say 2020, what's unique about 2020, at least to me, is we had a black swan event here, a couple, financially and globally. And what I mean by that, you guys remember we had COVID, the shutdowns, everything. And something to know here, believe I've seen this before. Yeah. Whenever Bitcoin before has tested the 200-week moving average, that was a good time to buy. Now, recently, we've tested it, gone under it. If we get to the 200-week moving average, I'll buy again. I don't want to get too much into that. I just want to show you that with the COVID event, that was here after we had the big sell-off. We went back down to the 200-week moving average over here. So what happened after COVID? Well, you guys might remember quantitative easing. There was money printing. The U.S. government, Trump and Biden, both authorized, so I don't want to get political. They both had parts in our inflation problems today. They both printed around $6 to $7 trillion. And when they did, over time, that helped housing go crazy because we also had super low rates. Bitcoin went crazy. The S&P 500 went crazy. Look, you can see the COVID dip right there when all the printing was going. Look at that move. I mean, this is the S&P 500 here we're talking about going up over double. So I will say, I already know this is going to be higher than the other two. I do think this is a unique situation because we went down, look at that, 70%. But then when we measure, let's find where the start of 2020 is. Okay, what's the closest one? Right here. We'll take it from the body again. So you can see right here from the start to the COVID crash, went down around 50%. So if you had $1,000 worth of Bitcoin at the start of the year, then you had $500 worth of Bitcoin. But if you would have held on to it, what would have happened by the end of the year? I'm looking at that blue box at the bottom. Blue box at the bottom. Man, look at these last few candles. Holy crap. It went up a lot. 317%. So that was the highest ever. The other two election years, the other two halving years went up. What did we say? 250%, 130%, and this one went up 320%. To me, this data point is an outlier. Now, yes, this is what actually happened, but again, the other two election cycles, we didn't have the money printing and the black swan event that went on. So I do wonder if we went from 250 to 130, which is about half, so let's take half of 130, okay? 130 divided by 2, 65. So let's say, what would have happened if we moved up 65%? We're going to go from the body there. What would have happened if we moved up 65%? Where would we have been? Right here. Funny enough, look at that. 65%. This was the end of the year. And again, obviously that doesn't have to happen again. I'm just going around the patterns that we've seen before. And this is why, to prove my earlier point, why you don't want to base your investing plan purely off of former patterns, is because things like this, we don't know what's going to happen if there's going to be a black swan event, quantitative easing, money printing. If you would have believed and taken the other two having election year cycles as just the Bible and this is going to happen, you would have said, you know what, we're only going up 65%, and when it does, I'm going to sell, whatever, or you would have been banking on 65% and then missed out on all this, okay? So what's funny about the 65%, though, is look at this. It's pretty much the range here from the low to the high. Yes, we had that mid-cycle top, but when we came down to the low, COVID crash notwithstanding, and we're just measuring from the bodies, that was the low to the high until we were having that big move above. So just something interesting. So let's stick with that theory, okay? What's 65% divided by 2? That's around 32, 33%. So we're going to move forward. And again, anything else you guys notice about this? like before, we're in the low areas here. Now, we did get around that 50%. We had the dip because of COVID, but maybe you could have argued that we're going to be around the 50% and then been here near the highs around that 65% and then taken off. Okay? He could have argued that. Let's take a look. Let me get rid of this parallel channel, something I was playing with earlier today. Let's move this first of all, because that's in the dumbest place possible. I apologize. Let's take a look and see what would a 33% move do. Ooh, right there on January 1st. So let's zoom out a bit. Otherwise, it's going to have a hard time showing that. So 33%. Which one was it? Of course, then you can't see it as well. 33% right there. 33%. Where would that put us? I want to shrink that so we can see it better. Oh my gosh, look at that. What do you notice? This is me seeing this for the first time with you guys. Look at that fib line on the left. That is interesting. We're going to move this out. Let's find the end of this next year. Okay. 33%, 32.5%, whatever. We can put it right there. What are you guys seeing? That if you are going to base what's going to happen this year off of previous halving and election years, if you're going to believe that the amount we're moving up is being halved each time, then you could say or guess that, you know what, maybe we're going to stay in this 50% range here between 42,000, let's just say the 0.5 on this fib right here. And this fib is from the previous, let me zoom out, my God. We're talking about the 0.5 here, the 42,000, okay? You could say that maybe we're going to stay between the 0.5 and the 382 for the first half of the year, around there, like the other cycles did. Maybe we'll go under it a little bit to around this 39,000 level. Okay, that's what the other halving election years have done. I have this buy zone down here. Maybe that's not going to happen. But you could say, you know what, maybe because of what the other two halving election years did, we're going to stay up here. And then the second half, we're going to be in this 49 to, what range is that? I'm hoping for this number to go away. Oh yeah, 55,802. Guys, this is my brain on a Monday after work. I'm like, why is this number here? I want to see the exact number, and it's the exact freaking number that I locked there because of this. Okay, that's where my brain's at. I apologize. So you could say, based off the first two halving election year patterns, if that were to continue, and again, we made a solid argument that because of the range this was in, the 65%, or the 65%, because that was half of what it was before and half of what it was before then, that was this range. That was that range. That maybe this is going to be our new range right in here. So I'm going to draw a couple lines just because why not? Let's actually, you know what? Let's do horizontal ray. That way we can just start there. That we might be staying within this range, and that might be the time that we get to. You know what? I shouldn't have done a ray. I should have just done a trend line. Let's do that instead. Because a ray is not going to, that's just going to go on forever. So let's go from the beginning of January. We're going to go at that, like, we're going to go right at that fib. We're going to go straight right. Again, I'm looking at the bottom and seeing where the end of the year is. Close enough. Right there. Are we going to possibly, well, we can draw our trend line up there. Why not? Are we going to possibly hang up in here like those other times? Are we going to just be within where we started, where we closed first half of the year, hang around halfway through, kind of chop up in here, go down, up, halfway, get around there, chop up and down, and then by the end of the year, start making our way up. Maybe. That would seem to line up more with the first two halving election year cycles. Again, the last one was different. We had this black swan event that took us lower, and then we had the money printing that took us higher. But again, if we stick to the 65% range, that was this. Okay, we've established that. So this is a bullish argument, I would say, for this year. I've told you about the bearish arguments that when we take a fib, and we're going to draw a fib right now from the low of, I'm talking after we made an all-time high. If we draw a fib lining up the low and that high from before, okay, which is right around there, I've told you guys this theory that when we made that mid-cycle top where we wicked to the 382, when we got under the 0.5, this is where I have buy zone and mega buy zone. This took 6 months, by the way, and then we were chopping around for a year. I was wondering if we're going to hit that 382, and then my buy zone, it's a 0.5 to the 618. Great times to buy, amazing times to buy were between the 618, 786. Black Swan event notwithstanding. So I've said, if that were to be the case again, that the buy zone, and I give myself a little extra room just in case of where things close and where they wick, because sometimes, as you can see with the ETF event, we're closing down here around the 0.5, even though we wick to the 382. So again, as we're coming down here, if it's to be anything like last time, that fib is more of a bearish stance or a bearish outlook. That if we get underneath the 36, 37,000, and again, we had a recent weekly sell signal that usually plays on average to around 15, 25%. It would take us in there around this fib here. Is that what's going to play out? What happened more or less with the last cycle? Or is what's going to happen more in line with what all the halving election years have done before? That's more of a bullish outlook, even if you're mega bullish. I mean, this is not a bad outlook to say, you know what, every halving year, every election year, we typically hang out in the lower 50% of where we start to where we end up. In every election year, every halving year, guys, I'm learning this right with you. The percentage moves down half. We had 250%. Okay, let's go back to 2012. I'm going to write that in here so I don't forget. Halving year, 250% up. Let's do that. My font is like super huge. That's obnoxious. Oh my God. Why is it not letting me edit it? Here we go. Nope. Here we go. Halving year, 250% up. That took way too long. All right, 2016. Halving year, 130% up. We're going to move that over here. And then this one. Yes, we went up higher. We could say halving year, 65% up. But then we add, let's put QE with an asterisk. And I know some of you are going to say, you know what? Hey, that's just what happened. That's the data. Why are you ignoring real data? And this is how my brain thinks, by the way. I've told you guys, market psychology. I am certified and have a degree in the field of psychology. A lot of knowledge, experience, time spent educating, consulting. As a scientist, you let the field evidence and the data drive your conclusions. And so what I'm contending here, at least, is that we had an outlier event. That's all I'm saying. I'm not trying to ignore the real data that is there. And so if that is a criticism of yours, look, I get it. I will say, though, again, what's the pattern we notice that we see on the rainbow chart? We have diminishing returns. It's logarithmic regression. Maybe this crazy move wasn't quite supposed to happen. That's just a theory, okay? So 250, 130. We're going to say 65 because it was in that range. And so let's go over here and let's type in halving year. Let's just say 33%. We're gonna stick with that. And let's get rid of this ugly line I drew. So this is a video I thought about doing for you guys because, well, and ladies, hopefully, I don't know if any ladies are watching the video. If you are, thank you. Welcome. But this is a video I thought of doing. And guys, this is the first time I've been looking at this data with you. So I'm not trying to come in biased. I want to do these videos with you so you can see, one, how I think and approach the markets. I try to do so in an unbiased way as much as possible because I do think how we assess information has a big part of the financial plans or the investment plans that we make. If I come in, let's say before this video, you thought I was a completely bearish person, which isn't true, by the way. Again, I try to be objective, but let's say you felt I was just a bearish person. By doing this video and looking where the data is, I have shown you right here, hey, I'm being objective, not trying to be biased. This is what it's shown us. From where we start to where we end and the pattern of our gains being halved, which funny enough goes with the halving. Halving, again, is half the amount of Bitcoin being mined. So with half the amount of Bitcoin being mined, halving, is our average gain going to be about half of what it's been during other election halving years? I don't know. I'm very curious because we have two bits of conflicting information, and I need to comprehend this a little bit, or not comprehend, but I need to mull over this a little bit. And are we right now in a decent buy zone already? Might this change my plan, having this new information? Because I don't want to take this new information and just disregard it because it doesn't go along with all this that happened back here. This was a great area to buy. This is an amazing area to buy. And if we go from the low to the high, are we going to get something similar? Again, though, I mean, just by looking at a 200-week moving average, what do we see? We hit the 200-week going up to this high here. This was after the previous peak or top for Bitcoin. We topped again, went to the 200-week, got to the 200-week again, had another all-time high. Now we've gone under the 200-week, so again, diminishing returns. How is it going to be different this time? So I'm going to have to consider both of these data points, which are both completely valid. Maybe it's going to be a little bit of both. Might we have a little bit of what happened last time and the 33% up? Because, again, moves over time, they tend not to be as violent or as volatile as before. So if we're just taking averages into account here, maybe we're just coming down to the 618, not quite the 786, but just the 618. We're staying in here through halfway through the year, and then we're finishing 33% up. Just some thoughts, guys. Anyways, I'm going to end it there. I have some thinking to do, and I hope this video has helped you consider and think about some stuff as well. Thank you for being part of this channel. If you have any stocks or crypto or indicators, anything at all you want me to look at, with a technical analysis outlook, comment what that is down below. Be happy to do that for you guys as part of a video in the future. As always, none of this is financial advice. Here in market psychology, I do try to use my knowledge, experience, certification, all that to look at the markets and look for value when there's fear. And right now, things are in extreme greed, at least with stocks. I am here, there's the last year. These moves do tend to correct. And I know it's hard to be patient when things are overbought. When there's extreme greed, it is hard to be patient. And sometimes you have to wait 4, 6, 8 months to have amazing buying opportunities again. But again, that's why I say time in the market is more important than timing the market. It's not to say that there aren't stocks and cryptos and altcoins where you can find amazing value. There are, and everyone has a different risk tolerance. So what my risk tolerance is, what my plan is, should be different than all of yours. I'm not trying to tell you what to buy, but just trying to encourage you how to unbiasedly assess information, because if you can do that, that right there can already help you have better risk management and increase value of your investments overall. So hope you enjoyed today's video, going on this deep dive with me on the halving election year cycles. And I hope you all have a wonderful week. Happy Monday. Take care.